Hey guys, Steve here with the strategy session for Tuesday, September 2nd, 2014. We returned from a long holiday weekend here in the U.S. The markets were closed yesterday, and the markets basically reacted as I would expect. We really closed back in the middle of the range. We tried to push above and below this recent support area. Okay, we tried to push up to this. We were at one point we were as high as 207 or 2007. Get my numbers right, 2007. And then we were as low as 1992. So we closed basically right back in the middle of the range, down half a point, 2001. And really just looking at this little consolidation that we've had for the last week, through the last week, which was a holiday, and then today, just really sideways action. Not much else to say about that. We're sitting, as far as I'm concerned, we did break out on the S&P, and now it's a good chance that I think we need to do some consolidation here. If you saw the video from this morning, the stock market outlook, that was kind of what I called for in a lot of the indices. Was let's put in some consolidation, let's work off those overbought conditions and make a real run into the end of the year towards new highs and eventually close the year out. It's crazy that we're even talking about that, but yeah, close the year out at the highs. I think that's the best setup for us going forward. As far as our positions go, we talked about this in the weekend update, so if you didn't watch that video, a lot of the information that you're going to need was in there for this coming week. I'm going to run through these real quick. Again, just because there's really not a lot to do at this point. I keep talking about this the last few weeks, but once you really put your positions on, there's no reason that you have to sit there and do something every day. That's one of the worst things you can do. Trading because you're bored or you feel like you need to trade is one of the worst possible situations you can put yourself into. You make most of your money when you sit on your hands and when you just let your positions work. And that's what we're doing now. We entered the position. We're managing our risk. That's one thing to manage risk, but let's not try and, micromanage this stuff to the point where we get stopped out too soon, or, we want to make sure that when we're stopped out that the trend is actually changing. I made a few mistakes, especially if you watch the Anatomy of a Stock Trade and Win. I did make a few mistakes in that trade, and that's something that we learned from. But, we don't want to make those mistakes constantly. It's one thing to do it once in a while or here or there to learn from it. But, to do it all the time is not going to make for a profitable situation. So Apple up 0.78% and just continues this monster run it's had. It's gone from 94.20 to 103.30, and we've had 2 down days. That's it. So there's really no reason to even think about shorting this. If you were thinking that, you're basically stepping in front of a train here. And for us, there's no reason to really do anything. We have our stop here at 94.29. At this point, the way it's shaping up, this $100 level looks like it may be our next stop, but that's a long way off. We could potentially bring it to 99.17. I don't usually like to use tops of consolidations or highs as stops. I always feel like the stock comes back and breaks through it just enough to stop you out. So I do like to use lows more often than not. But anyway, with that said, in Apple, really not much to do there. ADM tried to break out today, and then with the morning sell-off, I think it kind of took a hold and basically closed right back in the middle of the range, essentially up 0.4%, 20 cents, not much. But this morning it was looking good. I thought we were going to have that breakout, and I think right now the stop that I'm looking at here is 48.20. So we do need some higher prices or some more time to go by. Allow this 50-day moving average to catch up, and we can then move our stop. AMT. Oh, and with Apple, don't forget next week, guys. I think it's Tuesday. This probably tells me right here. I think it's Tuesday. They have their conference. So Tuesday's the conference in Apple. So just be aware of that. AMT. And you guys tell me. I mean, is there really anything to do right now in AMT? I don't think so. I think we're at the point where we moved our stop. Our next stop level will probably be right here around this 94.30. We could probably adjust a little bit more, and then eventually potentially 96.50. But that again is a long way off. Right now, AMT is just moving sideways. We've talked about how I think it may consolidate in here between the $100 level and potentially this 96.50 level. I think that's a very strong possibility. But if you look at the weekly chart, what's it doing? Is walking sideways, and in my opinion, going to hit this trend line and then bounce higher. So good looking setup if that's what actually happens. But for right now, we manage our risk. 93.51, that we've locked in a gain. We entered down here, we've locked in that gain, and we'll see what maybe we can get more out of it. Maybe we eventually do move to 96.76, but it's not today and it's not next week. For right now, that's our stop. APD, this continues to move sideways. All right, we're testing that 50-day moving average again. First sign for me that we would be potentially reversing would be a break of this 131 level. Okay, that break there would tell me that now we're putting in a lower low. Okay, so here was a high, came down, put in a higher a lower high. I'm having a rough time with the English language today, guys. All right, so let's start again. First sign of trouble, we put in a high here. Here's our low. Then this is a lower high, and if we broke this 131 level, that would be a lower low. So meaning that now maybe we're starting to trend downward. At this point, I don't think we can move our stop yet to this 131. We haven't identified that this is a low yet. I was really looking for a breakout over this 135, 134 level to really confirm that this is an actual low. At this point, this is the last confirmed low with a high. Okay, because we had this breakout. So here was the last confirmed low. Now, as far as I'm concerned, we're just consolidating. But the first sign of trouble would be a break of this 131 level. If we can get a move over 134.50, I will quickly and gladly move my stop to 131. Disney, just consolidating, okay? Right in that range. Nice move today, up almost a little over 1%. In my opinion, I don't see why Disney doesn't test $100. But I think this consolidation in here is very welcomed after this nice move out of this larger consolidation. Okay, that breakout was nice. Now if we can get another few days of some sideways action and then eventually a break over 90, that'll bring us to defining another stop level. I think we move sideways maybe for a week or two. That would be great. EQR really just moving sideways. Not much going on there. Kind of similar with that little, almost looks like it's putting in a little rounded bottom like APD did. But for right now, 64.08 is a stop. If we can get this to break out again over say 67.50 and our 50-day moving average comes up, we'll gladly use the $66 level as our new stop. Expedia, nice move today. Okay, we're gonna have another video for Expedia with the stock trade idea for tomorrow morning. But right now, Expedia, looks good. We had a nice pullback to this consolidation resistance. Okay, now it's bounced off of that. We did put in a closing high today. Our high of 88.34, which was today's high. So I think we're looking good here. I think we can potentially in the next day or so move our stop to this 82.50. And you know what? I think we're actually going to do that right now. Because in the next day or so, this 50-day moving average, just based on on time, is going to be higher than 82.50. Here's that level there. We locked in some more profit, or locked in reduced risk. I don't know if we necessarily locked in profit. I don't think we did yet. But at least at that point, we're able to reduce some risk. The 50-day moving average will be over that level in the next few days. So 82.55, I'm glad to use that as a stop. And let's see where this goes. If we can consolidate in here, come closer to that trend line, bounce higher, then obviously our next stop would be 85.80. Fidelity, nice bounce. Okay, we're looking at still using 54.86 as a stop. Let's see what happens here. I think with the weekly chart, we're coming in, we're consolidating again. We get that nice break over 57.65, then I think this potentially becomes our new stop level. General Dynamics coming back in, testing this recent breakout. All right, so it's just working off. It did have a nice significant move from 114 all the way, almost a $10 move, a 10% move. So at this point, I think having a little pullback, testing this 121.60, and then eventually breaking out. Good setup, good technical setup there. And what happens is you got to watch, because a lot of these stocks, when they break out, they could be in overbought conditions. So really meaning that there's really not enough oomph to keep them continuing. Some of our stocks, which we'll get into in 1 minute, kind of forgot about that whole process, and they just have taken off, which is fine too, but it makes it much more difficult to set stops along the way, and you'll see that in 1 second. H&R Block, again, same thing. It had a nice move from 31.65, broke all the way out over 33. All right, and now it's just consolidating here. I think that's a good setup. I think that's good for the stock. Let it digest those gains, and let it then put in some more work in consolidation, and then eventually break out higher over the 34 level. And then the run that it has will be a little bit more believable. Here was the one I was talking about. Love Southwest. I mean, we entered this position here on this break on 814, and we entered at 29, and we've already made 10%. So, but you can see right now, the hard part here is I have nowhere right now to move my stop to. Okay, we could probably eventually, well, actually we did already. We moved it already to this 2083, but through here, I mean, there's really no other place that it's consolidated for long enough to identify a stop level. So, this one may be one of those that we have to set a stop here at this 29.35 eventually, which would be the top of this consolidation right through here. But I don't think, at this point we have to worry about that. But in the same respect, we do at some point need to lock in some gains, because, we have had a 10% move here. And the way this looks like it's going, it looks like it can go another 10% easily. So, of course, we'll see what happens. But this is one of those times where, yes, it's nice to have these quick flyers. And if you had options on it, good for you, because this one's probably a double or a triple at this point. But for us right now, it's just very difficult to set a stop. So it's good to have them, but in the same respect, sometimes they're a little bit of a harder position to manage. But anyway, for LUV, 2803 is our stop. RSG, really just consolidating in this range here. Again, this is a nice setup. We had this nice breakout, but now what we're doing is we're consolidating, allowing that 50-day moving average to catch up, and allowing this trend line to come into play a little bit more. We did move our stop to 37.50. I think the next level, if we can hold these levels here, which is a big if right now, would be that 39, and that's a long way down the line. And the last one, Tesoro, really it's just consolidating in here. It was down. It was our biggest loser today, down 1.5%, 1.48%. But for right now, again, I think we're just consolidating. Our stop now is 59. Eventually, I would like to move it to the 61.73. But for right now, let's just see what happens. It paid a dividend recently. I think if we can consolidate, move over to this trend line, bounce higher, I think that would be good, because then we'd be able to actually set a stop, fairly tight, probably up to 61.73, or maybe even a little tighter to the 63, and then let it work from there. But again, looking at the weekly chart, a nice breakout from this weekly consolidation, but now we're testing this 65 range, this tail right in here, okay, from 520 of last year. All right, so we're testing that area right now, and this is a big area for us. So, let's see if we can get that breakout. Let's see if we can get some, consolidation in here, and then go from there. But for right now, like I said, 59.08 is our stop. As far as our weekly watch list goes, not much. Oh, I'm sorry. I shouldn't have said anything. AIV. I didn't think this one broke out. AIV, there's your breakout. It must have been a late day rally on this one because I looked at it earlier and it wasn't. But there's your setup, okay? This was one we talked about, AIV. All right, it pays a nice 3% yield. And there you go, okay? So you got your breakout over 34.27. You're going to set your stop under at 33 and then see where it goes. Again, we are not going to be taking that position. One, because I think we're maxed out in financials, and two, because we are basically maxed out in the portfolio in general. Schwab bounced off that trend line. Kroger, almost breaking out. I think, if it were me and I wanted to take the position, I would want to see a break over 51.50. That would just be me. But again, we have to start watching these earnings, and this one has earnings on the 11th, so that would be less than 2 weeks away. Would be a no trade for us. CVS just moving sideways. Nvidia right at consolidation or resistance, and MCK right at resistance. So with that said, guys, I mean, you could see there's a lot of stuff that's working. One that I personally like, Facebook. I'm not long this. I want to be long this. This would be doesn't pay a dividend, but in some of my accounts, I trade anything and everything that doesn't. It still has to be in the S&P 500, but even if it doesn't pay a dividend, I will still trade it. But this is a great looking setup here. Okay, so a lot of the high flyers that we've talked about before, Tesla, that looks good. Facebook, Twitter. So that's always a good sign as well. We talked about this, I think, a couple weeks ago. But I look at these stocks more as a gauge than anything else. I haven't looked at these in a couple days, but Priceline's bouncing. Google, which I'm long, is kind of in a little bit of a predicament between this trend line and then this downtrend line. So it's kind of figuring out what it wants to do, where it wants to go. But I do look at those. Apple, Amazon, all these stocks mean something, even though we don't trade them. To me, these are the leaders. These are the high beta names, and these are the ones people want to trade. So these can give you some significant returns very quickly, and the fact that they're all kind of setting up in one way or another tells me that that I think we do definitely have some more upside to go. Whether that happens this week or not, that remains to be seen, or even this month. But I think just the way the market's setting up and what I'm seeing when we do these stock market outlook videos, I do like the setups. But we'll continue to take our trades and trade our trades based on their own individual merit. We're not going to relate any type of outside influences to them, and we're just going to trade them on price action. It's one of the easier things to do once you can accept that price is all that really matters, and kind of forget about all the noise and forget about all the news headlines. Definitely makes trading a lot easier. So with that said, have a great rest of the night. We'll see you tomorrow, which will be Wednesday. If I said Tuesday in the beginning of the video, that's because I'm screwed up because of the holiday. So tomorrow will be Wednesday. Today is Tuesday, and we'll have that stock market out or stock trade idea for you tomorrow morning. And then I'll be on Twitter and StockTwits, so make sure you're following me, and we'll see you tomorrow. Take care.